Here are the biggest stories to kickstart this trading day, Thursday. Will the Monetary Board finally pull the trigger on a rate hike today? Bangko Sentral Governor Ben DIOKNO hints at a possibility of tightening, saying the space for a loose policy has already narrowed.
Business groups again appealed to the 18th Congress to pass key economic reform bills in its last few days.
OFW rights advocate Tuts Ople says she is contemplating the offer of presumptive President Bongbong Marcos to become the next Secretary of the Migrant Workers Department.
And local shares rally for a third straight session. That's on Wednesday's trade as investors bought shares ahead of today's policy meeting. We begin our broadcast with Bangko Sentral Governor Ben DIOKNO signaling a possible rate hike at the Monetary Board meeting that is later today.
Now, DIOKNO admits that there is now less space for an accommodative policy. Speaking at an online briefing, DIOKNO says the space for maintaining a loose monetary policy has already narrowed given that the 4.9% inflation settled near the higher end of the Bangko Sentral's forecast range of 4.2 to 5%. The Monetary Board has kept the benchmark interest rate unchanged at a record low of 2% since November 2020. DIOKNO says that while inflationary pressure has been attributed mainly to supply-side issues, second-round effects are beginning to show.
Second-round effects are starting to manifest. The recent approval of the wage hikes in the National Capital Region and Western Visayas leaves the door open for further increases in other regions as wage petitions were deferred since 2020 as the pandemic disrupted economic activities. At the same time, the Philippine economy exceeded expectations after growing by 8.3% in the first quarter year-on-year. However, while the economy now appears to be on track towards returning to its pre-pandemic trajectory, there also remain significant downside risk to growth, including lingering threats of a resurgence in COVID-19 infections and slower global economic activity. These developments strengthen the case for a withdrawal of monetary policy accommodation as inflationary pressures now appear more likely to persist and threaten to disanchor inflation expectations.
Now, business groups and foreign chambers are reiterating their call for the outgoing Congress to pass the last set of economic reform bills in its remaining sessions. Now, 13 business groups and foreign chambers said they sent letters to the 18th Congress urging them to pass 6 measures that have been approved in the lower house but are pending at the Senate. These include the last 2 packages of the Comprehensive Tax Reform Program, as well as the Ease of Paying Taxes Bill, among others. Now, the business groups likewise said they strongly encourage the Senate to ratify the RCEP trade agreement. The 18th Congress will resume session on May 23rd before its adjournment on June 3rd.
Now, the BIR has formed a task force to inspect compliance with the government order to resume on-site work for IT BPO firms and ecozones. The tax agency said mission orders have been issued authorizing inspections at places of business of economic zone locators. This comes after the BPO industry was granted tax breaks on the condition that it performs all its work in economic zones. Finance Secretary Carlos Dominguez has earlier taken the position that such businesses are free to extend work-from-home arrangements but must do so without benefit of incentives.
The search continues for cabinet members of presumptive President Bongbong Marcos.
Now, while some members of business sector wants the next administration to retain Duterte's economic team, Marcos's camp says the presumptive president is looking to define his own government. Marlene Alcaide with a story.
Record high debt and hot inflation. These are just some of the headaches that the next administration will inherit. That's why all eyes will be on who will make up presumptive President Ferdinand Marcos Jr.'s economic team.
Humina yung ekonomiya nung may lockdowns, lalo na 2020, 2021. So, nabawasan yung tax collection ng gobyerno. At the same time, yung gastusin niya lumaki dahil nga doon sa mga ayuda, sa mga financial assistance, sa mga various COVID programs like healthcare, yung mga vaccine, booster doses, sa healthcare system, yung pagpapalakas ng ating mga hospital, and so on. Pati iba pang assistance programs na yung intervention na kailangan gawin ng gobyerno. Pati, siyempre, isa doon yung pag-increase ng infrastructure spending.
Marcos Jr. acknowledged that coming up with an economic team will be a priority. But until now, Marcos Jr.'s transition team has yet to name a single member of the team.
They're doing so well in the private sector. Hindi naman sila sanay na under microscope. So these are all the challenges that we are facing as we continue with our search.
Some experts and members of the private sector are suggesting that the current economic team be retained.
While we respect the many good people that are serving in the present administration, I think we'll just give him enough space to define his government.
Marcos is currently in Australia to enjoy some private time with his family. Before leaving, he asked Susan Opel to be the secretary for migrant workers. But the OFW advocate is still reflecting on the offer.
Hindi lang OFWs yung gusto niya na ma-serve ng department, kundi mag-develop din ng mga programa para sa mga pamilya, lalo na yung mga anak ng OFWs na naiiwan dito, na kailangan din ng gabay, kailangan din ng suporta.
OPE has been consulting family members, advisors, and stakeholders to seek clarity. For News 5, Marlene Alcaide, we are One News.
How is the property sector positioning now that the country has elected a new set of leaders? Together Outlook, we have on the show Joey BONDOC, Associate Director for Research over at Colliers. Good morning, Joey. Thank you for joining us.
Morning, Jess, Danny.
All right. Now, we just read your report prior to the interview here. You said in that note that property developers, investors, and occupiers were on wait-and-see mode prior to the May 9 polls. Now that the results are more or less clear, what's the sentiment here from property stakeholders?
Well, similar to what we see for several business groups, of course, a lot of property developers are waiting for the new administration, for presumptive President Marcos to implement or lay out the key economic reforms. The appointment of crucial cabinet positions will also be crucial. We will head the Department of Public Works, the Department of Transportation, and importantly, the Department of Human Settlements and Urban Development. So all these key appointments and the laying out of economic agenda will, of course, form part of their plans. How will they expand moving forward? So, previously they were in a wait and see. I think right now they are more aggressive and are looking at launching more projects. But again, this will hinge on the appointment of key cabinet officials and implementation of crucial economic measures.
Okay, now specifically on the property space, what are you hoping to be retained from the previous administration, or continuity as they call it, and what crucial reforms are still needed? What are investors really watching out for?
Well, Daniel, we want to see the build program continued. We want to see the current administration or the new administration, the Marcos administration, implementing or allotting 5 to 6% of the country's GDP on infrastructure. That will be crucial because we want to see infrastructure implementation continued. We want to see more economic centers developed outside of Metro Manila. So we want this implementation of infrastructure be complemented by decentralization. So we also want to see more economic centers such as Pampanga, Laguna, Cebu, Bacolod, Iloilo, Davao being developed aside from Metro Manila. So all these factors will again support the growth of the property sector. At Colliers, we always say that infrastructure plays an important role in raising land and property values. There's a pending bill in Congress, a property reform valuation. So again, that will be important. And let's see if that will be passed into law before the current Congress concludes.
Okay, so shifting from the elections administration incoming over to the recovery of the sector post-COVID, no? So can we say with confidence, especially after the first quarter GDP print, which was much higher than expected, that, you know, all of these worries of inflation, of prices going higher, na temper naman by this GDP growth. But at the same time, Joey, you've got the BSP possibly raising rates. And of course, the first sector that will be hit is the property space. People with loans might not, you know, get more, you know, might not buy anymore, or will have a hard time paying.
Or interest will be low, at least.
Interest rates will get higher. So how will that affect, you know, the recovery that's already been on shaky ground?
Well, as you said, the GDP surprised with an 8.3% growth in the first quarter of 2022, and that's a turnaround from negative 2.8% in the first quarter of 2021. So there are concerns. Inflation, of course, is increasing, and the April inflation of 4.9 is the highest in 3 years. Interest rate hikes also is in the offing, and we believe that some developers will likely tweak or look at the current promos or reprice even their loans that they're offering to the public. So again, that will have an impact on the property market. You have to note, Danny and Jess, that for the first quarter of 2022, only 3,000 units were sold in the pre-selling condominium market in Metro Manila, significantly lower compared to what we saw in 2017, 2018, 2019. At the height of the POGO demand in Metro Manila. So that will again be crucial, and let's see if the pre-selling figures will recover for the remainder of 2022. Again, because of the wait-and-see stance of some developers, only 2,000 condominium units were launched in the first quarter of 2022, significantly lower compared to what we saw during the peak period 2018 up to 2020.
Okay, Joey, given that, let's touch on some specific markets here of the property sector. Let's start with the office space here. I mean, you have completion of new supply that's up. Also, take-up is also up for the first quarter. The first, in fact, according to a report, the first in after 7 quarters of negative absorption here. How optimistic are you that this is the start of a new trend here? And how worried are you of a possible headwind here, given, of course, the local transmission of a new Omicron subvariant?
You're correct, Jess. We're optimistic that the positive net take-up that we recorded first quarter of 2022, which again is the first positive net take-up that we recorded after 7 consecutive quarters of negative net absorption in Metro Manila. We hope that this will be sustained over the remainder of 2022. We see a lot of BPO companies still occupying office space, logistics firms, back office operations, even financial technology companies occupying space outside of Metro Manila. So we're likely to see this being sustained moving forward. Again, even with the work from home arrangements, BPOs continue to look for office space. So hopefully we end the year on a positive note and end 2022 with a positive net take-up for office space.
Okay, Joey, what about residential? You mentioned first quarter was, you know, on the downside. What happened there? I mean, we don't really understand. Give us a bit more clarity on that. Is that a one-off in the first quarter? Is this something specific? Or?
And what are they possibly banking on for a turnaround here for the market?
Yes.
Well, again, wait and see, Danny and Jess, because I know a couple of developers that held off new launches in the first 3 months of 2022. They were waiting for the conclusion of the May national elections, and in fact, we're waiting for the election of a new set of officials. I think this will be positive to the property market. The fact that we had a democratic, successful elections, and we were able to, peacefully elect a new set of leaders. And I think right now they are waiting for the implementation of crucial reforms, and also waiting for the new administration to lay out its macroeconomic agenda. So it's a wait and see still, but I think we are seeing some positives in the market, and once the presumptive president appoints key cabinet officials and lays out his macroeconomic agenda, we believe that there will be more launches in the market.
But quickly, Joey lang are the property prices the same na as pre-COVID for residential? Like, has it gone up? The tenancy, the rental rates,
yeah.
the per square, because there was a dip during the pandemic.
Unfortunately, not yet, Danny.
Not
Because
yet.
you have to note
Okay.
that at the height of the pandemic, 2020, 2021, prices and rents dropped by a combined 15 to 20%. And the recovery that we're seeing would only hover between 1 to 2% annually from 2022
wow.
to
Okay.
2024. So still a long
Layo
way
pa,
to go, yes, before we recover pre-pandemic prices.
Okay, is that also the same case for the retail space market here? Or I mean, it seems as though we're not
Tenancy
yet there in
rates,
terms
yeah.
of recovery here. Vacancy rate in NCR malls still at double digits and increasing, in fact. I mean, that considering that it's been months that Metro Manila has been under alert level 1, and is it also worrying for you that vaccination pace is somewhat slowing down as well?
We're optimistic with the retail sector. In fact, during our last property briefing, we highlighted that if you look at these property segments, it's the retail sector that has the greatest potential for rebound. We have mall operators saying that consumer traffic is about 60-70% of pre-pandemic level already. There will be new malls that will be completed across Metro Manila, more than 200,000 square meters of leasable space for the remainder of 2022. And we're likely to see rents finally picking up again, rising of those low 1 to 2% starting 2022. So there will be green shoots of recovery definitely for retail, and we're really optimistic with the potential of the retail sector.
That is, of course, the hope. That also is, of course, good for the economy of the retail sector. The retail space in particular would also grow. Thank you very much for your time this
Thank you.
morning again. Joey
Thank you,
BONDOC,
Jess.
Associate Director for Research over at Colliers Philippines. Thank you, Joey. Now, pausing for a quick break. Coming right up after that, we'll check how the local bourse is doing this morning after it managed to close above 6,700 yesterday.
More of that and other stories when Business World Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
All right, Dan, all eyes are on the peso as the BSP gets ready to fire. Give us a health check on our local unit.
All right, Jess. Well, it has actually been supported amid all of this rate hike speculation. It rose a second day yesterday, and you can actually see here on my terminal that we're trading at 52.423. So after having broken above, 53 levels, we're staying basically sideways since mid-April. Another very interesting indicator here is CITI. They said that they will be exiting the bearish Philippine peso exposure, and they will be assessing the BSP. So they did mention that they were noticing a hawkish shift in the central bank's rhetoric, but they did mention negative factors for the peso are persisting. The currency, however, still has outperformed Asian peers. Now, if you take a look at here on my chart of the Asian currencies, everyone is in the red, but the Philippine peso, just after Hong Kong, is one of the least hit in terms of at least the year-to-date basket, Jess.
All right, now shifting the conversation now to the equity space here. How are we doing after that stellar performance yesterday?
Well, a bit of a pullback, if I can say so. So right after that running of a couple of days, you can see, markets taking profit yet again. So just really hovering over that 6,600 levels, Jess. We are down by 1 7/10% this morning. Of course, a lot of eyes on the Bangko Sentral. And let's just take a quick peek at the two sectors that we need to watch out for here, most of which will be impacted by a possible increase in interest rates. Properties, in particular, sold off. So that's down by 1.12%. We had, Joey Roy BONDOC saying that the residential space not so bright in the first quarter. And you can see as well the financials here down by 1.2%. Only East-West in the green. So again, another sector that our, eagle-eyed investors are watching out for. And before I end, the market hit, just a quick check on GMA and ABS-CBN are two media stocks. In the past month, of course, this was the election month, GMA has been down by 30.6%. But they did mention that they do not expect any legal problems with the incoming government of presumptive President Ferdinand Marcos. They said they have no reason to believe that the relationship with the new government will not be friendly. But another one to watch out for as well is ABS, which is going up a touch, just by 1.7% after being sold off by close to 25% in the past month.
The Labor Department says the new minimum wage in NCR and Western Visayas will be implemented on June 3rd. Workers in Metro Manila are expecting a wage hike of 33 pesos, while those from Western Visayas will be seeing a 55 to 100 peso increase in their minimum wage. Now, aside from these areas, workers in 3 other regions will soon see higher take-home pay. The Labor Department says wage boards in Ilocos, Cagayan Valley, and Caraga have also issued orders increasing minimum wages. The approved wage hike in Ilocos ranges from 60 to 90 pesos, 50 to 75 pesos in Cagayan Valley, and around 30 pesos in Caraga.
More Filipinos consider themselves poor in April. That's compared to December of last year. This is according to the latest SWS survey. Now, in its quarterly poll conducted last month, the SWS found that 43% or 11.9 million Filipino families rated themselves as poor. That is slightly higher than the 10.7 million who felt poor in December of 2021. Meanwhile, 34% said they are borderline poor, and only 32% felt that they are not poor.
All right, a bit of a bleak news there to end the program with, but the hope, of course, is that at least in the next 6 years, let's see if those numbers will improve, at least on the upside.
Again, wait and see, Jess, on that
Just like what
front.
BONDOC was reiterating earlier during the interview. And that's a first look into the business day this Thursday, May 19, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.